This is Startup Series Latam, where we're about to take you on a journey through the dynamic world of Latin American entrepreneurship. In this show, we'll explore the stories of visionary founders and leading VCs who are transforming the region.
I actually don't like when founders just talk about a big market, a big TAM. It's much more interesting to say, here's a smaller market with room for me to grow. We look for two things that matter a lot to us. One is resilience. Companies that are hard to kill. Doesn't matter what you do, they're gonna continue to exist. So there are lots of problems like that across the region, especially the big markets, Brazil and Mexico, that need to be solved. And technology is the best way to solve these problems. And the founders are as good as they are anywhere else in the world.
From the Alan B. Levin Center here in South Florida, this is Startup Series Latam, where we are inspiring líderes. I'm your host, Mariana Atencio, and today we're thrilled to have Shu Nyatta, founder and managing partner of Bicycle Capital, a new firm with $0.5 billion of capital focused on investments in growth stage technology companies in Latin America. Shu launched the SoftBank Latin America Fund, which he co-led and helped grow to over $7 billion in assets under his management. He holds degrees from Harvard and Oxford, where he was a Rhodes Scholar, arguably one of the most experienced investors in the region. Bienvenido, Shu.
Thank you, gracias.
So last time we were together, we were, I believe, sipping caipirinhas in the streets of Rio de Janeiro, and you looked so comfortable, so at home. And contrary to most of the people that I'm interviewing for this show, you're not Latin American, you are Kenyan. You have chosen Latin America. You have chosen to transform the tech and the entrepreneurial ecosystem in the region. Why?
Well, I look Brazilian, so it's a good place to start.
Good point.
Everyone thinks I'm from Brazil when I go to the region.
Do you dance like a Brazilian?
I don't know, but I don't speak like a Brazilian yet.
Okay.
I'm learning Spanish para la vida diaria de Miami.
Pero hablas súper bien español.
But it's irrelevant in Latam because term sheets are term sheets.
Okay.
And everything is in dollars in English. It's quite interesting, actually. I love emerging markets. I'm from one. So even though I built my career in the US and have worked globally, there's something about the soul of emerging markets that's just more interesting. You're not just helping people have a more convenient life when you're an innovator in emerging markets. You're transforming their lives. And so if you're putting the same amount of work into whatever you do, you might as well transform a life instead of making it a little more convenient. So emerging markets have this pull. That's one reason. And the other was very opportunistic commercial. My current partner, my former boss Marcelo Claure, is Bolivian. We met at SoftBank. We got excited about Latin America together. We went and met founders together. We fell in love with the place together. That just happened very opportunistically. So for both those reasons, part is soul, part is commercial. And as somebody trying to build an investment firm, you have to find an angle. There are too many people doing the same thing. And so if you want to distinguish yourself, you need an angle. Now, hopefully it's a good angle. And so in Latin America, the bet is this is a good angle. It's undercapitalized for the wrong reason. We're here to provide capital that's much needed, and that way we can build a distinctive firm that doesn't look like every other firm out there.
So you talked about what venture capital can do in other parts of the world, and I think you've used the term convenience enhancers versus, funds that are truly creating and solving for structural and societal issues in Latin America. Tell me more about that.
Yeah, so we're not an impact fund. We're a commercial fund. We want to generate returns because I actually think, especially coming from Kenya, the worst thing you can do is charity. The best thing you can do to a founder in an emerging market is hold her accountable for returns, not for you feeling good. But the difference is the problems we're solving are fundamental anyway, because the problems to solve in these places are big problems. Nubank, which is the most valuable fintech in the world, $70 billion company. I mean, that's remarkable. That's listed in New York, that's based in Brazil and operates in Brazil and Mexico and Colombia, is solving credit for the middle class, really all income categories, but really the middle class in Brazil. And with that solution, you're really transforming people's lives, but also generating a $70 billion company. So there are lots of problems like that across the region, especially the big markets, Brazil and Mexico, that need to be solved. And technology is the best way to solve these problems. And the founders are as good as they are anywhere else in the world.
You said you come from an emerging market yourself, from Kenya. There's a lack of trust that exists in emerging markets. And that can be a problem for many investors, but it can also be an opportunity. Tell me about that.
Yeah, I actually frame the definition of an emerging market as a place with less trust in everything in life. You don't trust your government's going to do the right thing. You don't trust the plumber's going to fix the toilet the right way. You don't trust the products on the stores and the shelves are good quality. There's just a lack of trust. The US has a lot more trust than Kenya. Norway probably has more trust than the US. But that's really a fundamental difference between these markets. What we call developing is there's not a lot of trust in life. That's the opportunity for founders. So Nubank, again, just to use that example because it's a good one, is not just a financial services company, it's a trust brand. And in every segment, it's not just about providing credit, it's about building a trusted brand. And so with Nubank, not only will someone let you give them a credit card, but they'll allow you to do all other kinds of things with them for their life. They'll allow you to provide them with insurance, provide them with car loans, they will shop with you. It's different from Chase. Chase is a bank. Nubank is a trusted institution for people's lives beyond financial products because there's such a trust vacuum. And that's the opportunity for entrepreneurs. If you want to build really special companies, you have to start with this idea of, I need to create trust where there's a vacuum of trust in whatever industry I'm operating.
You see the opportunities. Latin America is also a region that has a young, tech-savvy population. It's strategic geopolitically. Why is there still this disconnect, this mismatch between the type of investments that you're seeing and the opportunity that exists, especially after you have companies like Nubank and Rappi and the Mercado Libres of the world that are on the global stage performing really well?
Narratives are very hard to change, and simple narratives are very easy to propagate. We did some research on 4 years' worth of headlines in the Financial Times and the Wall Street Journal. We said, what have these papers been saying? And these are two, one European, one American, the most trusted business publications. What are they saying about Latam? For 4 years, we looked at every single article.
I'm such a geek, I want to read that.
Every single article that measured Latam. It wasn't a really scientific thing. We looked at all for 4 years. And when you summarize the headlines, it's cartel, inflation, violence, if they're in a good mood, soccer, uncertainty, destabilization. Like that is the sense you get from consuming these headlines for 4 years in these two
And as someone who's
papers.
a journalist, every time that I want to pitch a story, if it doesn't fall in those buckets, they're like, we don't want it.
Too much nuance.
Doesn't seem like a Latam story.
And now when you ask people about Latam, the first thing they want to do is talk about Milei or Maduro, because these are the sensational things, or some body hanging on a bridge in Mexico from some cartel in the north of Mexico. So the problem is you don't have narratives that are positive. And for investors, that is extremely scary because the last thing you want to do is lose money. And we are intermediaries, ultimately. Firms are intermediaries between LPs who provide the ultimate capital, big sovereign wealth funds, big pension funds, big family offices globally, and founders. We sit in between. And that big money is shaped by narratives. They read the FT and the Wall Street Journal. And when they're looking at what to do over the next 3 years with capital, they see AI, and the US and San Francisco, and maybe defense, and maybe mid-market private equity, and then Latam with Maduro and Milei, and they're like, no way, there's too much brain damage. Why should I do that? So there's a really challenging narrative problem. The only way you solve that is you make people money. And just now, I think, is the wave that's going to start doing that. Mercado Libre was one example. Globant was another. Then you had this long stretch of nothing. But now you have this crop of companies that are really mature, very sophisticated, as good as anywhere in the world. And they're going to start going public when this window opens next. I don't know when it's going to open, the IPO window. But when it does, you have 10 companies that are really high quality, that will be listed, and start to give people confidence that this is a place that can produce money.
So making people money, and then the role that we play, which is storytelling, which is also critically important. And that's why we decided to do this podcast series to begin with. So I want to thank you for being a part of it and helping change that narrative.
Con gusto.
Claro que sí. Going to your, the roots of Bicycle and your friendship with our Henry Crown Fellow, Marcelo Claure, tell me about how the idea for Bicycle came about, I believe 2022, and why the name Bicycle.
Yeah, it was even before that. So at SoftBank, we discovered that there were no Latino founders showing up in Tokyo to pitch the CEO of SoftBank. Masayoshi Son, who's this mythic figure in the world of venture capital. Literally every other region had founders coming to Tokyo and going through his conference room, nobody from Latin America. And so Marcelo really had the initial impetus, and he's a great person to break walls and make a path and then allow me to walk through and build something like that. We have a great relationship that way. So he broke the walls for Latam, and he got the initial capital. And we spent a few years meeting with founders and investing in the region and got very excited about what was there. Now, SoftBank has its own set of priorities, as it should as an organization, and LATAM is never going to be a core priority for SoftBank. But we had so much conviction in this particular opportunity, and we saw a chance to build a different kind of firm focused on some of these emerging market companies that has slightly different flavor. And we said, let's do it. Marcelo's been an entrepreneur before, so for him it was an easy decision. For me, it was much more of a leap. But we wanted to build something for this region we fell in love with that was really focused on the need we saw in the market, which was growth equity. There are a lot of great early stage firms, but there really isn't a lot of growth equity. And that's why we said, let's build this firm. We see a market need, we believe in the opportunity, let's do it. The name, so I've loved the name for a long time. And by the way, it has nothing to do with the fact that I also like to ride bicycles. That's like a
Which I knew about.
Cherry on the cake. Bicycles are an amazing technology. They are timeless. We've tried to change them and improve them for 100 years. They look the same. It's like two circles and a triangle. Any kid can draw a bicycle. And we haven't been able to improve it. It is what it is. It's this amazing invention. It makes people way more powerful than they would be without it. And it's accessible to everybody, everyone.
Very democratic.
Extremely democratic. Steve Jobs famously said, Apple doesn't make computers. We make bicycles for the mind. And so this idea of the bicycle as an analogy for what tech should do for humans is a really powerful one. AI is a bicycle for humanity, you know. So when you think of the idea of what technology should do in the world and for people, a bicycle is a perfect representation of that. And bizarrely, no other venture firm had claimed it, despite all these connections and Steve Jobs quote, et cetera. So it was available. And so we said, this is our lucky day. Let's just get this name and go from there. Now, we also happen to like riding bicycles, which helps.
And I'll take the analogy further. The day I met you, actually, we talked about you cycling and if I potentially was going to get into that sport or not. And you said, Mari, cycling is very local. So is there something about what you guys do, boots on the ground, and this micro focus that the fund has that is also analogous to the bike riding culture?
It's true. To ride somewhere, you really need to know the roads and where not to go. It's indeed a very local sport. If you're running, you can go run for 30 minutes in the gym, but a 30-minute bike ride is not a real bike ride. Like, you have to get out into the place that you are. So yes, you need to know where to go and where not to go. I think that's a wonderful addition to the list of reasons. So I'm going to say that it was already a reason.
You're not going to give me credit for it.
Okay. Zero credit.
Okay.
It was there already.
Let it be known on the record.
It was there already. We thought of it.
So let's talk about this idea of bicycle capital being micro-focused. You're only going to choose 3 to 4 startups to back a year, I believe?
Yeah, so 3 to 4 a year.
Okay.
Roughly 10 to 12 per fund. But they're different stage of company. This is not venture investing. This is growth investing, and it's actually a very different thing. All the companies we invest in have proven there is an economically viable market for what they're doing. They may not be profitable as a company, but for the specific products, they're profitable at what we call a unit level. All of them. Like there's no negotiation there. If they're not, we're not even taking a look. And generally that starts at Series B, as they call it, and beyond. So the companies are much more mature. They have $15 to $20 million of annualized revenue minimum in general, sometimes a lot more. They're either profitable or very close to it, or a clear path. You don't have to imagine a lot of things to get a self-sustaining, profitable company. And the reason we pick that category goes all the way back to what we were discussing before. We have one job to prove in this fund, that you can find good businesses in Latin America that will make investors money in a reasonably short period of time. Like, that is our mission statement. If we prove that, there will be more money. So we can't be caught up in ideals and trying to do all kinds of things. We need to be super focused on delivering on that mission. If we do, there's more money. If we don't, there's no more money. Like, it's very, very crisp. So that's part of why we've designed it this way, that also fits the market need and the duration of returns for investors. Investors want cash back And so you need to go a little later in the company's life cycle to try and deliver on that.
And when you talk about how you generate that revenue in the market, there's clearly a gap that you're aiming to fill. Tell me about that.
There was a huge wave of funding that came into Latam in 2021. Just to give you a sense, in 2018, when we launched the SoftBank fund, we really launched it early 19. So in 18, it was roughly a $3 billion a year venture market across Latam, $3 billion, which was a tiny basis points of GDP compared to other regions, very low. When we came in 2019 and 20, it went up to roughly 4.5. So from 3 to 4.5. In 2021, it went to something like 17.
The wild
billion.
West days.
Yeah. I mean, it quadrupled. All the money in the world decided Latam is cool. And literally it went up 4x. The next year it went down to 7, and now we're back to 3, like before 2019. So all of that momentum has kind of disappeared. And the simple reason is people don't need to care about Latam. These funds just go wherever is an opportunity that seems better than somewhere else or better priced than somewhere else, and then they disappear when that doesn't exist anymore. And that's okay for them. It's not a criticism of their strategy. They're optimizing their strategy. But it creates this vacuum of dedicated capital in the region for the best companies, which changes how founders behave.
Of course.
Which changes how later stage investors think about funding companies. Well, there'll be no more funding once you raise the A, so I'm not really going to pay attention to you. So if you can fill that gap, and we're only filling it for 10 to 12 companies, so we're doing a tiny bit of the work. There are many other companies we will not invest in. So it's not really about competition. We wish there were more funds like us in the region, but that's the reason we chose to focus on this particular segment.
And the fact that you're, in the game will generate hopefully more capital to flood, but not like the venture capital tourists that came and went.
Yeah,
right?
and it's okay to be a tourist. Money finds opportunities.
Right.
I don't like to denigrate anyone trying to invest. If they want to come to Latam, it's great. The mistake is to do it too quickly because you create bad behavior or you overcapitalize companies, and it's very difficult to recover from that. We're seeing a lot of companies that were overly funded struggling, bizarrely, right? There's a lot of money, struggling to recover from that because they have a lot of money, they spent it all, they haven't shown as much progress as they should have. When you raise money at a high valuation and you raise a lot of money, it's nothing to celebrate. You've just raised the bar on the expectations that you need to meet.
Right. One of the founders that we interviewed for this podcast series, he's the founder of Jagua, and they improve urban living through data. And he said, listen, when it comes to fundraising, I need to take small but firm steps, because if I do it too quickly, then it's going to get out of my hands.
That's
and I'm
right. That sounds like a wise founder.
Disappoint a bunch of people.
Yeah.
When you have to choose 3 to 4 companies a year, how do you identify those gems in Latam? What is it that you look for that makes you say, this is the right fit, or on the contrary, this is not going to work out?
Yeah, so I'll give first a generic, then a specific answer. The generic answer is a good company is a good company. What Warren Buffett likes is what Philippe Lafont at Cotu likes, is what Robert Smith at Vista likes, is what we like at Bicycle. Very good businesses. The problem is the industry we're in, they haven't become those businesses yet. So you have to predict that they will become very good businesses. And generally, the more proof points, the better. So we like simpler businesses where you don't have to do a lot of imagining to see it become a good business. For example, our first investment, Motu, which is a motorcycle fleet management company, you just need to imagine them continue to do what they do a little more every year for 10 years. Gympass, the same. Cayena, the same. All these companies that we love, the execution plan is very straightforward. You don't need to do a lot of imagining. So that's one. Predictable to become a good business. The other is they need to be in a market that has room for you to grow. I don't just mean a big market. I mean a market with room for you to grow. You could have a big market with no room for you to grow.
Right.
Because it's very complicated, very competitive, a lot of barriers, regulatory or otherwise, that prevent you from growing. So I actually don't like when founders just talk about a big market, a big TAM. It's much more interesting to say, here's a smaller market with room for me to grow. Right. So we care a lot about that. People talk a lot about the founder and the founding team. It matters a lot, but that one is a very difficult one to quantify. I would say you know a special founder when you meet one, and it's very difficult to reduce that to some sort of formula. And you know a sketchy founder when you meet one.
Right.
You know,
Right.
I think a lot of that is pattern recognition. I made a lot of mistakes with founders, and you just kind of learn how to evaluate people a bit better. So those are the basics. But beyond that, we look for two things that matter a lot to us. One is resilience. Companies that are hard to kill. Doesn't matter what you do, they're going to continue to exist. And companies that have optionality, which is the opposite. There are many ways this could work. It doesn't just have to be this one thing they get right. If they don't get this right, there are three other things they could get right to become big. So we care a lot about optionality and resilience. If you imagine those on the two different, it's a sandwich, it's a burger. And the meat is this core, the team, the market, the business model.
Right. And then once you choose them, like in the case of Motu, for example, given the nosedive that happened in 21 that you just walked us through, how does Bicycle help them, navigate the choppy waters of the Latam landscape?
Well, they didn't have to. So the thing I didn't mention that's specific to Latam and to our fund sizes, we like very capital efficient businesses. So you could have all the things I described before, but need $2 billion to make your business work. That was possible in 2021. That is not possible now. Or maybe it is, but it's a real gamble. So we like businesses that consume very limited amounts of capital, do it really efficiently, and don't need a lot in the future to prove what they need to prove. Motu is exceptionally capital efficient. You may not think so because they have motorcycles running on the street and they use a lot of debt to fund some of that CapEx build out. But they don't need to raise a lot of equity money from venture capitalists to get what they need to get. All three of the companies we've invested in so far don't need to raise a lot of money. The advantage that gives you as a founder is you control your own destiny. It doesn't matter if the waters are choppy, if you have enough fuel in the tank. You can wait, and when they're less choppy, you figure a way out of that particular patch of ocean.
Talk to me about what worries you about Latam.
To some extent, emerging markets always have an X factor. Instability of some kind, currency movements of some kind, political fluctuations of some kind that reinforce the negative narrative are very damaging. So now, even though Brazil and Mexico, which are our core markets, have proven that their institutions are getting stronger over time, their central banks are getting stronger over time, even their parliaments are getting stronger over time. They've shifted from left to right and they've been okay. Even though that's true in those markets, all this noise from Argentina and Venezuela makes it difficult to do business in Brazil and Mexico because people lump all of those countries together. So there's always that X factor of volatility from politicians and from currencies that scares people. But that's really it. I mean, the rest, the founders are there, the markets are there, the liquidity options are there because if you build a good business, you can take it public in the US. And Brazil has a great public listing venue as well, if it's not as big as it needs to be to go public in the US.
Is that, for example, a good source for you to kind of pick winners?
Yeah. So the Bovespa in Brazil is a great stock exchange. I think we're past the world where we need to only count on New York Stock Exchange and NASDAQ for exits. There need to be nodes in other parts of the world, whether it's Amsterdam or Riyadh or Brazil. There need to be alternative venues, and they're coming up. I mean, Brazil has a very successful, for quite a long time, public stock exchange. I think there will be many more companies listed there. So those are not the things that worry me as much as this overall narrative, perception, volatility point that we started with.
That can really come from anywhere.
Come from anywhere.
But we're living in such a time of instability, really worldwide, that if you analyze the geopolitical risks, they're not unsurmountable.
It's not only that, but it's not that much worse in Latam than it is in many other places. I mean, the dollar has been more volatile than in a while. Japan has been more volatile than it has in a while.
Look at what just happened in the UK and France.
Exactly. But for some reason, people see volatility in emerging markets as more dangerous. I think it's because it's an unfamiliar place. They don't speak the language. They're not familiar with the place. They're scared.
You have labeled Latin America the next frontier. Tell me about sort of the prior waves and what you are foreseeing for the next 10 years.
So SoftBank was this incredible education for me because when I started there in 2014, early 15, there were just a few of us, and we would go around the world finding interesting companies. So I was lucky to invest. This was before the Vision Fund, which was a much bigger organization. I got to invest in China, in India, in Europe, in the US. And you noticed what was happening in those places. China as a wave happened in the early 10s. India was supposed to be the next big thing. I think it's failed to live up to that promise, but it got a lot of attention, a lot of capital from like 15 to 20, you know. Latam wasn't really on the radar. And Africa, I think, is way behind Latam. I'm from there, so I say it with love. But it's not ready yet for several reasons, but I don't want to derail this to talk about Africa. And so Latam, and in particular Brazil, and then Mexico, but in that order, are the next natural countries to evolve in the way that China, India, Southeast Asia to some extent have evolved. Because they're big, the big populations, they have purchasing power. India doesn't really. So they have middle classes that can support sizable companies. They have good founders. They're close to the US. I mean, they have all the ingredients. And geopolitically, they're very strategic. So Brazil exports a lot of food to China. Mexico is benefiting from all this nearshoring that's about to happen. So there are reasons why they're on the cusp of something great. Now, people have said that's always been true. They've always been on the cusp of something great. When are they going to actually be great? One day it'll happen. And I think it's now.
Tell me what the next wave will be about.
Basic digital services. So Latam is still very analog. Mexico is 80% cash, which is insane. Right? Brazil is much more advanced on that front, but there's so much to build in the form of digital infrastructure to help companies, big and small, transition from the old world to the new world. That's happened in payments in Brazil, but in every other piece of doing business it hasn't. There's a lot of paperwork everywhere. Everything's very manual. And in Brazil, you're not going to get a foreign company winning. It's just not going to happen. It's too complicated, too local. You have to know where to go and where not to go. And so the Brazilians will build the digital infrastructure for Brazil. Mexico similarly, but even on the money front, it first needs to do that transition from analog to digital. So just a lot of basic digital infrastructure. Imagine roads and bridges and fiber, but the digital version of all of those things, which still haven't been built.
And leveraging data and AI to make that as efficient as possible.
That's right. You can build them the right way from day one because you have all these new tools.
So let me get into your personal story a bit. I mean, you find yourself with all of these crazy Latin Americans at SoftBank. You obviously have a stellar curriculum, you're a pretty good student, Rhodes Scholar. I mean, the world is your oyster. Why did you decide to become an investor?
It took a while. So I didn't know that I wanted to become an investor until about 10 years after graduating college. Because up to that point, I grew up in Kenya, as I said before, and I came to the US for university, right? So at 18. What I was in those first 18 years, I was turned into a target-hitting machine. Like that's you're turned into something that finds a target and hits it. Like that's what you're created to be.
In Spanish we say, donde pones el ojo, pones la bala.
There you go. All the people I bumped into in the US in my freshman year at university knew who they were, knew what their interests were. I was like, what language are you talking? What do you mean you know who you are and what your interests are? Where's the target that I'm supposed to hit next?
Did that come from your upbringing? Or?
That's just in the water in Kenya, and it's true in India, in Nigeria, and you pick a market where people are trying to get out, right? And also the education system is oriented around that. And so it took me 4 years to deprogram my brain. I felt that by the time I left college, I was just starting to ask these questions, so I wasn't ready to pick a career. And I had all these other interests in arts and music, so I spent 10 years after university exploring every path you can imagine just to see if that was the right one. And it caused a lot of angst with my dad. Why did we send you to the US to go be a musician in Brooklyn? What are you doing? Big drama. But 10 years in, I settled down and I learned about tech. I realized it was something I was reading about anyway. I met founders and realized these are my people because they're optimistic. They're trying to create a new version of the world. They're not just trying to climb a ladder in a company. Right? That notion, I think, is also brainwashing. Just because someone tells you you should fight for the promotion doesn't mean that's the best thing to do with your life. There are other mountains to climb. You can just unplug from that system. You choose your destiny, and that's what founders do. They're creating their own reality. So that really resonated, and I said, this is the community, this is my tribe. And as you get into the tribe, you start to wonder, where do I fit in the most? And I think I'm a little more analytical. Early stage investing felt a little less analytical. I liked the rigor of being able to analyze data, not just people. And so I kind of found my way into growth investing, but it took a while.
And what was that aha moment with Latin America specifically? You talked about soul. One of our founders called it La Tierrita. You know, there's this earthiness to Latam.
Yeah.
And the same thing happened to me in my journalism. What was that moment? Do you remember where it was?
I think it was our first trip that Marcelo and I took to check out the region. And we went in 1 week. This is classic Marcelo itinerary. He said, we're going to Latam. I said, great. I said, we're going to Brazil. I said, great, that'll be great. We'll go to Brazil and come back. He said, no, no, no. We're going to Brazil and then Argentina and then Belize and then Colombia and then Santiago and then Mexico City and then back. We're going to spend a month? No, 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 1 week.
Wow.
So we did this lightning tour, stopped in La Paz briefly to watch a soccer match, kept going to Bogota, and it was this incredible immersion. And the feeling you have after a week like that is, wow, look at all these wonderful people doing stuff. I want, and it's just instinctive. You just want to be part of it, or you don't, right? So I very much wanted to play a role in what was happening because it felt real.
And you have people with the will to do things differently, right? And there's also
Well,
this...
they have to. I don't know if it's will. You know, if you don't have capital, no one believes in you, you got to figure out a way. So you get even more resilient people. I mean, some of the most resilient founders in Latam are from Venezuela. Why? Because they've learned you just got to make it work.
Absolutely.
And they go to Mexico and they crush everybody because the people there are like, who are these crazy people who will do whatever it takes?
And you need to
it's
deploy
unfair competition.
So much creativity because you're used to doing so much with barely anything.
Creativity, grit. Yeah.
Absolutely. But also when you look at the beauty of all these cities, you see the potential there, and it's hard not to reimagine that it could be so much better than it is.
Yeah,
you know?
Yeah, that's right. I'm an optimist. I like to root for the underdog. And to me, there's no soul in helping a company deliver food faster in San Francisco.
Why do we need the 10th throw pillow company in New York?
Why do we need a slightly softer mattress? You know, really.
But do we not?
No, not really.
I'm just partisan to soft mattresses, but no,
Not
but
really.
I understand. Like we don't, you know, versus truly improving people's lives and making money while you're at it.
And making money,
Yeah,
right.
yeah.
So find a hard problem, yes, and many people find hard problems, but find a hard problem that is also worth doing. Not just a hard problem, because it's fun to rotate in a hard problem and solve it and feel clever. Find a hard problem that's worth doing. And I think those two statements are the guiding principles for my life.
Before we go into our lightning round, because this is all about paying it forward for entrepreneurs and founders who are watching you and all of what you've done, any advice on pitching to you and pitching to you successfully, or any story of a founder that has pitched to you and you've said, I'm going to say yes?
So the difference is we don't work that way. I think that is an early stage
mentality
approach, the pitch. We're past the pitch. And actually, I think a lot of mistake that founders make in the later rounds is to still pitch. It's nice to pitch, but what matters more is what have you built? And is it healthy? And is it working well? And is your team good? And all those sorts of things. So we rely on the founder's proven leadership rather than the story. A lot of founders struggle to let go of the story. They really do, because that's what gets you the seed round and the A round. But at some point, you need to let go of the story and start to build a company. And so we look for signs of, are you building a company? Not just the charismatic leader who can say, now let's run to that goal and everybody follows them. And that works for a while, but it really doesn't last. So I'd say it's less about pitching and more about, are you obsessed with your problem? So can you tell me how your product is going to evolve over the next 5 years based on where it is now? Don't tell me about the market. Tell me about the problem you're solving and how you're going to keep developing solutions to that problem. Tell me about the team you're building. Do you know the details of your business? The number of founders who don't, they're too busy in the storytelling. Like, are you really the right founder to operate this kind of business? Rubens from Motu is a very unconventional founder. He's not the best storyteller in the world. He will tell you every single number about the motorcycles in Campinas and all over the country and what's happening with them. That's a good match. of founder to problem to business. So we look more for that. And it's really less about what you say in the meeting.
I love this idea of letting go of the story.
Yeah.
And even for every day, you know, when you're sort of below the line, I always ask myself, like, what stories am I adhering to today that I just need to let go of? So are you ready?
And a lot of that is ego, right?
100%.
So let go of the story of yourself. Be in the world, observe yourself in the world in a detached way, try to do effective things, and don't worry about the narrative.
But about what you're creating.
Yes.
And be obsessed with that.
Yes.
Are you ready for our Latino lightning round?
Okay.
Okay. This is how we finish every show.
Okay. Lightning rounds are always a little scary.
Yeah? I'm going to really scare you with this question that I'm only asking you.
You can edit it out if I mess up.
I know you're a singer-songwriter. Is there any one song that you like to sing, to jam to?
Like a go-to?
Like if you were to like sing a little something right now, you know? Tarareame algo.
Oh, that's not even a lightning round. That's like I have to think of a song, and we'll see. I'll reflect in the background.
We can go to the
process.
We can come back to that one.
Yeah. It's not suavemente, just so you know.
De Luis Crespo, no. Thank God. So, what is one word that best describes your journey as an investor?
Curiosity.
Which trend, country, or sector are you most excited about in Latam right now?
Brazil.
Who in the business world inspires you the most, dead or alive?
Charlie Munger, Warren Buffett's partner, because he just didn't care what other people thought. And to the end, he tried to do things in an unconventional way, always thinking about the first principles, and didn't try to take the spotlight. People think of Warren, don't think of Charlie. But he is as important, if not a more important, partner in shaping that whole company.
If you could solve one problem in Latin America with the snap of your fingers, what would that be?
Progressive regulation, so support innovation. Don't thwart it, simply, which Brazil is doing a good job at. But if in general that was the posture, it would unlock so much. Make it easy to create a business, make it easy to launch something, make it simple to register your company. Just make all this stuff as frictionless as possible. You'll unlock human potential like crazy.
Is there one Latin American saying that you particularly like?
Yeah, jabuticaba brasileira.
¿Qué significa eso?
So jabuticaba is a fruit that only exists in Brazil. And a jabuticaba is something that is very, very Brazilian that doesn't exist anywhere else. And there are many companies like that. Motu is a jabuticaba brasileira. So there are all these things that are unique to the place, and I think that's what makes them special.
Jabuticaba brasileira.
And by the way, it's a delicious fruit. It's like a tiny little, very tart, kind of like a plum, but not.
So next time you take me out in Brazil, we're going to go eat jabuticabas.
Yeah, we will find them, yeah.
Have you thought about your song?
I haven't thought about my song. I'm answering the lightning round.
No more lightning rounds.
We will have to have a concert version of this.
Okay.
And I will think of a song.
We will do that. Shu Nyatta in concert. That's coming up next here on Startup Series. Thank you, Shu.
Thank you.
Gracias.
Gracias.
Obrigada.